Every few years, a familiar drama unfolds in Washington. Headlines warn of an impending economic catastrophe, causing global markets to tremble with uncertainty. And the United States government faces the very real possibility of running out of cash. It's called the debt ceiling. But if the US is the wealthiest nation on Earth, why is it constantly on the brink of default? And more importantly, why does the borrowing never actually stop? At WealthLogic, we provide the in-depth analysis you need to understand the hidden mechanisms of the global economy. Today we're breaking down the truth behind the debt ceiling, the unique power of the US dollar, and what this cycle of debt means for your financial future. To understand the debt ceiling, you first have to understand what it isn't. It is not a limit on how much the government plans to spend in the future. Instead, it is a limit on how much the Treasury can borrow to pay for bills the government has already incurred. Think of it like a credit card limit. But instead of deciding not to buy a new car, the government has already bought the car, driven it off the lot, and is now debating whether or not it should actually pay the bank. As we've explored in our previous discussions on why we pay taxes, tax revenue rarely covers the full cost of running the country. To fill that gap, the government issues debt in the form of Treasury bonds. The ceiling is a self-imposed legal limit on that debt, a limit that has been raised, extended, or revised over 100 times since its inception. So why does the world continue to lend money to a country that is trillions of dollars in debt? The answer lies in the strength of the US dollar. Because the dollar is the global reserve currency, and as we've detailed in our petrodollar analysis, the currency of choice for the world's energy markets, there is an insatiable global demand for US debt. Unlike a household, the US borrows in its own currency. This allows the government to maintain a level of debt that would bankrupt almost any other nation. This exorbitant privilege means that as long as the world trusts the US to pay its interest, the borrowing continues. The debt ceiling is often less of a financial barrier and more of a political tool used for leverage in budget negotiations. So, how do you stay ahead of the curve when the national debt is constantly rising? First, monitor Treasury yields. Debt ceiling drama often causes volatility in bond markets, which can provide unique entry points for a seasoned investor. Second, recognize the inflationary pressure. Constant borrowing and spending can devalue currency over the long term, making it essential to understand the true value of money. Finally, consider hedging your portfolio. When the government debates its own solvency, assets like gold or Bitcoin often see increased interest as neutral alternatives. The debt ceiling isn't about whether the government can pay its bills. It's about whether it will. By understanding these economic trends, you can move past the headlines and navigate the financial world with confidence. For more expert opinions and clear, concise content on the forces shaping your wealth, subscribe to WealthLogic. Stay informed, stay ahead.